Hey, good afternoon, everyone. Welcome to Short Verticals. I'm Brett Crowther. Haven't been here in a while. It's good to see all my good friends out there as I've been back. I mean, last time I was in the office, last it was about May 29th. That's last time I taught this class was May 28th because then I took a long sabbatical, and I'll cover that in just a minute. But it's been a minute. Good to be back with you. And so we're going to jump into some things today. We got to look at the market, what's going on, because it's dramatically impacting our ability to potentially, make some paper trades. Looking at these short verticals. And so we'll discuss that. We will look at some potential things to look that we could look at, and some reasons of why we wouldn't want to look at some others, or why it might keep us away from actually placing a trade. And sometimes staying out of a trade is just as valuable as picking a good one, right? So we'll get into that. First off, let's take just a second here and cover some disclosures. Please remember that options do carry a high level of risk, not suitable for all investors. Information here is for general informational purposes only and should not be considered an individualized recommendation. Um, Paper money is for educational purposes only. Short options can be assigned at any time, regardless of whether they're in or out of the money or at the money. Investing does involve risk, including loss of principal, and past performance is no guarantee of future results. And then just a couple more here. There we go. That when we got our options disclosures here, also stop loss is not a guarantee that you'll get executed at that exact price. Can change from that. So there we go. Then let me pull up. Actually, I'm gonna pull up Thinkorswim, but I want to just chat for just a second. By the way, speaking of chat, we do have Connie Hill, a good friend of mine, on the line, helping out with those chats. So please, make sure you let her know you're there. Ask her any questions as you go along, and she'll be there to help you out, give you some assistance. Okay. So I just mentioned that it has been a minute. A lot of our paper trades that we placed before I left have now expired and gone. I'm not going to go back and kind of revisit everything on that. It's kind of going back a ways where it's kind of old news by now. But hey, everyone, Will, Austin, Paul, Scott, others, yes, good to be with you. And then there's several of you who reached out to me on X. In fact, let me pull over my X account. Yeah, I made some comments on it just recently. By the way, I wanted to just wish everyone a happy Independence Day. I know we're not quite there yet, but tomorrow the market is closed, so keep that in mind that there won't be any action going on tomorrow. And so for many of us, that might create an extended weekend. And so if you are one of those, please enjoy that extended weekend. But since I won't be seeing you until Saturday, or until after Saturday, happy Independence Day. I want to make sure I get that in. It's actually one of my favorite holidays, and I used to have huge parties at my house. I used to spend thousands and thousands of dollars on fireworks and create a whole presentation, really a block party that had hundreds of people. Then the kids grew up and went away, and I found out that I did a lot of it for my boys. But anyhow, happy Independence Day. But I want to scroll down here just a second if this will allow me. There we go. Let's froze up for just a second. Talked about the jobs data. We'll come back to this in just a minute. I did post some of my trip. Now, while I was gone on sabbatical, took a trip and with about six other friends, about three other couples. My wife and I took a sailing trip. We rented a sailboat down in Bahamas and sailed through the Exuma Islands. It was absolutely gorgeous. Everything we looked at was just a postcard, and so I posted some of that out on my Twitter feed. You can go check that out. But it was just absolutely gorgeous if you ever get the opportunity to do that. No, has anyone had a chance to do that? It was just fantastic. I'm fortunate enough that one of my neighbors is actually a licensed captain, and so we're able to get out there and do some actual sailing. It was terrific. It really was. But yeah, let me know if you've ever been down that way. And one thing I didn't know, we're out in the middle of nowhere. This is the strangest thing to me. We are out in the middle of nowhere. You cannot see land, right? It is just sea, everywhere you look. However, we're still worried about, running ashore. I mean, the average depth was probably about 12 feet, maybe 15 feet. It was not very deep because it's on this shelf that goes out forever. And so it was just absolutely crazy. But that's what gives that beautiful Caribbean blue. Is that sand that's just shining on the bottom. So it was amazing anyhow. But it is good to be back. And we got some things to cover. In fact, let's get out there and talk about what's going on in the market right now. Now, we looking at the SPX here as I have this up. We've had a pretty good run, right? It ran up to basically the beginning of June. Now, I took the month off of June, and I'll tell you, it was kind of weird because even out there in the Bahamas, out there, there was no cell reception. I was disconnected from everything. I couldn't get the internet. I wasn't able to look at the markets. And so it was one of those things. I came back a week later and the markets had actually, this is where I came back. I left on the 29th. The market was up here. I came back on the 9th, and it got reception again, and it's down here. I'm like, what happened, right? You take a little bit of a vacation, and then the next week, the week after that, my son got married. Our son got married, and so that was a big week. And then we that was this week, and then we went down to St. George in southern Utah this week and dropped again. And then we went to San Diego. My wife and I to our oldest son actually received his actuarial, his FSA certificate. Brilliant young man, knows numbers inside and out. And so we were down there, but so I kind of watched the markets rally and drop as I'm kind of doing each segment of this, each week in my sabbatical, and it's just kind of back and forth and back and forth, and that's where it's still at right now. You can see I actually drew some lines in here, a descending line here and an uptrending support line there. And what we have here is a symmetrical triangle. Now let's just talk about this symmetrical triangle for a minute. In fact, if you want to know more about symmetrical triangles, 'cause I'm just going to touch on it briefly, but if you want to know more about symmetrical triangles, one thing you can do is go out to our Trader Talk YouTube page, and if you go to shorts right here, if you go to the shorts, it'll bring up the YouTube shorts I put together. Now these are just really quick 3-minute videos. They're less than 3 minutes, and 3 minutes is the longest they can be. But I've done all kinds of different topics. I spent a lot of time recently going over candlesticks and talking about the textbook versus reality, because it's so interesting to me to see what I'd read in a book and say, this is how it looks. And I go out in the market and you can't find it. It doesn't look that way, right? And so I wanted to actually go out and say, okay, this is what it says it should look like, but this is what it really looks like, right? But here's one right here on symmetrical triangles. And so you can go check that out and it'll give some more information about that. But you can check out some others while you're out there. But so there it is on the YouTube Shorts. And by the way, if you haven't subscribed, to our YouTube channel, if you've already subscribed, don't click it or you'll unsubscribe. But if you haven't, join us. It really helps the algorithms. It helps us continue to create, produce, and offer you this education. So it does help us. So we appreciate it when you do. All right, so coming back here, talking about the symmetrical triangle. Now, typically a symmetrical triangle is actually a pause in a trend, whether that be a downtrend or an uptrend. And so this would indicate that it's a pause in the uptrend, right? That's generally what it could be. Now, does that mean it has to break the upside? No, it doesn't. It just means that's the way the pattern typically will play out. Nothing's guaranteed. This one could drop down, but if in case that is the fact, then sometimes that could be looked at as like even a midway on the run. Now, if that's the case, that could be a really good run or if in fact it does break out. So we'll have to keep an eye on that. But as of today, we're bouncing off a resistance, looking to possibly head back down to a support. Not a lot of bullishness in the market right now, right? It's been a little bit tough for traders. Now, there's a couple things going on here I think are kind of interesting, and I want to bring them up on some of the individual stocks, but this isn't, across the entire market that's dropping. In fact, if we were to go over to, let's see, where do I want to go? I want to go to, let's see, Market Watch, here we go. I want to go to the heat maps under Market Watch. And if I look at the S&P 500, this is going to break it down and say, okay, where is the market dropping? What's pulling the market down and what is, still holding in there, right? And what we see is the darker the red, the deeper the drop. The darker the green, the bigger the rally, right? And so the lighter colors mean it's not as dark, it's not as a big of a drop on the downside or not as big of a rally on the upside. And then, of course, the size of the box indicates the impact, kind of the weighting of that particular stock. And so the bigger the box, the more impact it's going to have. So obviously, NVIDIA is going to have a lot bigger impact. Its movement will have a lot bigger impact than Visa or MasterCard or something like that, right? And so we can see just obviously off the bat that NVIDIA is down, AVGO is down, Google, Alphabet, all that is down. Tesla's off slightly, but these are some of the ones bringing it down. But as you can see, generally speaking, we're not seeing a lot of red kind of all the way across the board. It's a little bit more where? Well, it's a little bit more over here in the information technology. And by the way, maybe I should point this out, that it's actually broken down too by sector. And so you can see there's some lines in here, these bigger black lines. They're pointing out different areas of the market. And so let me go in here and draw some of these out. Hopefully you can see these, because I know it gets kind of small, but when you do this on your own, you'll see it a little bit more clearly on your own computer, right? You can make the screen as big or small as you want. Whoops, one more right here. And Oh, that's not one. Anyhow, so we have information technology over here, communication services, financials, consumer discretionary, healthcare, energy, utilities, real estate, materials, consumer staples, industrials. And so you can see this area, healthcare, energy, utilities, real estate, materials, consumer staples, financials actually are doing fairly well, right? They're hanging in there. Industrials maybe having a little bit of a hiccup, a mixed bag of positive and negative. Communication services, though, that one is an area, that's a sector that's really being hit today. And information technology, it has some that are winning, but the bigger ones are losing. And that's kind of what's pulling that segment down. And so we'll really see this. In fact, let me get rid of these lines here. We'll really see this if we jump over to the NASDAQ and we'll see. There we go. We can see, we dive in here a little bit more. We can see the impact. NVIDIA, SanDisk, that's down quite a bit. Western Digital is down. Seagate, a lot of these computer technology type stocks, as we mentioned, Meta and others in there. So this is what's having a pretty big impact on the market, and that's going to spill over in many ways with what we're looking to do with our short verticals because it's impacting something else. And I'm going to bring this up a little bit later, but let me go back to the charts here. It's called the VIX, right? So if we look at the VIX right now, it just looks like, oh, hey, a little bit of movement in here. Yeah, it dropped down, it's right back up. And so maybe it's up a little bit, but it's actually lower than where it opened. And so it's not impacting things quite as, having a big impact, meaning we're not seeing a big spike like this day right here where the market just, the VIX, I should say, spiked up heavily, right? We just see some activity. But sometimes that short-term, really quick movement can have more of an impact than we think. It may not be in market direction or anything like that, but it can actually impact the options. What I'm talking about, like, let me go actually into a little short time frame and show you this. We'll do a 1 day, 1 minute. And what you're going to see is this is really taking a quick run up, right? It really spiked up quickly up to the, at least it's mountain time, 7, 8, 9 o'clock in the morning. And then, it still continued to run from the 10, 11, 12. And so the first 2 hours, a real strong spike and continued at still a pretty heavy rate through the next 3 hours after that. And so what that means is when we see a quick spike, market makers are on the side of the options. And this is where it really comes important with our short verticals, right? Because we're talking about playing options. We're talking about playing two options. And so that bid-ask spread is a vital role. And so a lot of times the things that we're looking for or the stocks that we're looking for in this class that we should be looking for in general, it should be stocks with very tight bid-ask spreads to make sure, we're getting the most bang for our buck, right? That's going to make sure the liquidity is a little bit easier to get in and out. And that usually comes with, higher volume and all that stuff. So high volume, well, that's probably one of the biggest ones that creates open interest and stuff, will really help with tightening that bid-ask spread. But one of the things that really widens it, besides the change in interest, open interest, that volume, is volatility. And when volatility makes a quick spike, what happens is you got these option makers, right? These market makers. They're buying when you go to buy, they're selling to you, but they're trying to then sell that, put that off on someone else and line up buyers and sellers. Now, when there's too many sellers, or let's say too many buyers and not enough sellers, what they have to do is increase that volatility so that the price comes up a bit so that sellers come into the market. And then they can line up, how many buys they're dealing with how many sells that are coming in. And so it kind of creates that equilibrium, right? Um, but when volatility comes in and there's just a lot of uncertainty and concern in the market, sometimes those we don't have buyers and sellers lining up equally, and so they widen that bid-ask spread to make sure they're taking a little bit more off the table, cushioning their pockets a little bit more because they're not as certain where this is going. They're not lining up. It's not as easy to line up those buyers and sellers. And so oftentimes when we see a quick pop in that volatility, it can at times widen those best spreads, making it a little bit more difficult to find the credit that we want, the trade that we're looking to take. And so it is going to impact what we're looking at today. And I'll go through that a little bit more, but I want to make sure we understand that. And so what that says is, what, some days it just isn't a good setup. And, hey, that seems to be what we run into on a Thursday, right? It seems to be the way it goes in our class on Thursday. The market just doesn't want to play with us, right? Hey, Mickey, good to see you. Yeah, Rice Bird, others, Scott Luck, good to see you. Yeah, it's good to be back. All right, so let me make sure I've got everything covered. And so, yes, and so let's go out and take a look at some of these, these stocks that are out there, right? And kind of walk through. So I it's going through a list. I have a whole list of stocks that we could potentially look at, looking at stocks with high volume, a lot of activity on it, and they have options and stuff. And so as I was going through, it was really interesting because what I saw was, earlier today, I was thinking about, oh, hey, this might be a potential play, right? Because it was coming down to support. And again, this is one of those benefits of waiting till the end of the day, kind of see where it closes. Because at, 2 hours in the market, my time, it was looking like, hey, we're going to come back to support, take a quick bounce, and possibly head back up like it had many times before, right? Run up, pull back, bounce, run up, pull back, bounce, run up, pull back, bounce, run up. I got one maybe here. And then here, looking for that bounce, but instead of bouncing, this thing continued on down and fell pretty hard. Now, people might say, hey, were there any indications of that? Well, yes, there were. And what could give us a slight idea that this might be happening? Well, this is what's interesting. We look at our RSI. Let's zoom in on this area over here. And let's make this just a little bit bigger so we can see our RSI down here. And so what we're looking at is a divergence on the RSI where we're getting, in fact, I'm going to redraw this because I want to make sure we talk about this divergence correctly. So what we're seeing here is what we call a bearish divergence. And what a bearish divergence is, it can be, let me draw this out so we know what we're talking about here. What we're looking for is and we're starting with price. Okay, there's two things we're looking at: price and then whatever indicator we may want. And that could be anything. It could be the RSI, that might be MACD, it could be lots of different things, right? But we're looking for price to make a high and then make a higher high. Okay, so we have a high here and then a higher high up here. And meantime, when we kind of compare the peaks that the indicator makes, and remember, we're looking at peaks, so we're looking peak to peak, we're making a high and then a lower high. So we have high here on the indicator and then lower high as well. And so if we draw a line across those, and so let me grab a different color here. Let's draw a line. So if we draw a line across those, we get this lower high on the indicator while a higher high is going up. So what is this telling us? Well, this is saying that we have this bullish momentum, or bullish movement, I should say, on the price, but there's not a lot of energy behind it. The momentum is waning. The buyers aren't as strong, and something's got to give. Either buyers need to come back in to help push this higher, or price action has to come back down. And so that's where people look at that and just say, you know what, that's kind of an indication that we may see this possibly roll over and drop back down. Now, I want to make sure we get this right, because I've seen a lot of people line up lows and do like a low to the high and stuff. It's not, it's high to high, okay? So don't forget that. We're looking at high to high. And on the flip side, by the way, just real quick, is we also can get a bullish divergence. Now, this one is bearish, right? Because we're looking for it to drop back down. And so this is a bearish divergence, okay? And we can also get the opposite, which is a bullish divergence. Went too fast on that, so it doesn't look as clean. Bullish divergence, let's slow down here, divergence, period. And on the bullish divergence, what we're looking for is price to make a low and then a lower low. So there's our low and lower low. And then on the indicator, make a low and then a higher low. So low and higher low on the indicator. And by the way, if it's a MACD or something like that, people often look for it to cross the zero line. If we're looking at something like the RSI, people will often look for it to be in one of the extreme zones, meaning the high needs to be in upper reversal. Should say over here, upper reversal, or the low needs to be in lower reversal zone, something that says it's at an extreme level, right? But again, then what we're looking for is we're looking to compare trough to trough. Okay, we're doing bearish is peak to peak, bullish is trough to trough, and it's suggesting that price is dropping down and even declining even more. But in the meantime, prices drop, or momentum is dropping. But on that second drop, where price dropped lower, the bulls are starting to come back in. There's more bullish energy than there was before, or should we say not as much bearish energy. And so again, something's got to give. Either the bearish energy is gonna pick up and roll back over, or price action is gonna pop. Right now, what does it mean when we see a divergence? This doesn't mean that the price action is gonna like totally reverse trends or anything. Oftentimes, if we see this in a bullish trend, it can bring it back to support level. All right. Doesn't mean it's going to go from bullish to bearish, but it could just mean it's topping out. But it is an indication of waning energy. And so if we were going to look at this chart here, we can look at this and say, okay, well, look at this. We got, some highs in here, like this high. Whoops, we don't want to do that. We want to do this high to this high. See how that's getting lower on our indicator, but the price action is going higher. And so that's an indication that, hey, something's, starting to wane here, right? Now, look at it didn't necessarily fall apart. We didn't see the price action change trend, but we just see a little bit of a sell-off. But then this continued again. Now we have another one from this point to this point. Again, price action making a higher high, right? And what are we seeing on the indicator? Lower highs again. And so let me get rid of the first ones because that one kind of played itself out, right? So I'm going to remove those drawings. And let me draw this in so we can see the highs and lows. So peak, higher peak, pull back, peak, lower peak, pull back. You see how they're lining up like that? And so this is giving an indication that it was starting, to just lose some of that energy, lose some of that momentum. And so it's not surprising to see it pull back. Now, this is pulling back pretty strong. There's some areas of support it might find. We might see it pull back to this horizontal support level that we can have right in this area. And look at how we have a confluence of items here. We have not only the horizontal support area, but we also have the moving average. We have a 50-period moving average on this, which could potentially bounce off that. And so this is something that possibly we'll look at, check on next week and see, but keep an eye on it in between now and next week. See if we get price action to come back and make a bounce, because this is where it's about, people often ask, how could I know, or how could I have been aware of something? Well, a lot of times it's kind of understanding the setup, right? How do you get something like a morning star? What does a morning star candlestick look like? Again, go over to the shorts. I have a lot of them on there, and one of them is the morning star, but the morning star will look like this. Price action coming down, 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 and it has a pretty good bearish candle, right? And then after that bearish candle, we get some sort of indecisive candle where it's a small kind of a doji or a spinning top type candle. And then after that, we're looking for a big bullish candle that at least goes halfway through that bearish candle. And so this together would make a morning star candlestick formation. Well, this is well, it's just a bullish indication. But when we're seeing this, could this be the potential for it? Could this be the first step? And then we're going to see, I didn't change colors on that, but you get the point here. Could we see something like this, right? And a lot of times though, when I'm talking to people, they're seeing it at this point right here saying, wondering how, or they see it afterwards and say, how could I have known? Well, we don't know, but we got to be watching, being aware of the possibilities of the potential setups that are there. Does this mean it will create it? No, it doesn't. But there is that potential, there is that opportunity. And so that's where we keep an eye on it. All right. So anyhow, let me go ahead and erase all those drawings. And so that's why we still bring it up. Now we're going to see this again and again and again. Like if we bring up, let me bring up Micron MU. What do we see here? A very similar situation, right? A very similar setup where we can see this one, we had a high and a higher high going with this high and a lower high. So we had, again, that bearish divergence here. It didn't fall apart. It just kind of pulled back a little bit. But now we have another bearish divergence. And this is a little bit more classical where we have this one right here. It came up high into the upper reversal zone, then dropped down. But the second one was in the upper reversal zone as well. And some technicians, a little bit more kind of like true to the form, if you will, we'll actually look for it to be a little bit more like this, where it runs up into the upper reversal zone, comes down, and the next one you can see it's just outside of that, didn't even make it up in the upper reversal zone. And so that is more of a, from a technical standpoint, a more true indication of that divergence. In fact, let me zoom in on this a little bit more so we can kind of look at that a little bit better. And so what are we seeing? Once again, possibly pulling back to support. We have a lot of these that are potentially coming back here. Now, why is the market dropping? Maybe we should have hit this a little bit earlier, right? A lot of the reports are because of the news that came out. On my X feed, I mentioned that. By the way, follow myself, Brett Crowther, CS, and follow Connie Hill, Connie Hill CS. But follow us on X. And I talk about, it was, it's being blamed on the jobs data, right? So because the jobs data usually comes out the first Friday of the month. This month happens to be the markets are closed tomorrow, so it came out today, right? We had the unemployment report drop from 4.3% down to 4.2%. So that's good news, but it's slightly good news, right? It's not a lot. But then the next thing is looking at the jobs created. And on the jobs created, what was it? 42,000? Think, let me go back and actually see my post. It was 57, sorry, 57,000 jobs were created, much, much lower than the 114 expected. And so about half of the jobs that were expected to be created were actually created. And so that was looked at as a negative. And so you weigh, okay, slight positive, fairly large negative. Overall it weighs in as a negative, and the market took a bit of a dip from that. And then, sometimes I can set the tone, and people just are a little bit concerned, and they go into a longer weekend and all that. So it's been a bit of a bearish push, especially coming from, as we mentioned, those technology stocks. So, but again, does this mean, have we seen a reversal in trend or anything like that? No. In fact, we often talk about trend as being, higher highs and higher lows for an uptrend. We got a high, low, high, low, high. What are we doing here, right? Even if it comes down to being equal low, but we wouldn't have a lower low, it still is an uptrend. And so this is again the setup phase, which we feel like we're not doing anything because we're not getting trades out of it. But again, sometimes sitting out of the trade or just waiting for it to develop is just as important as taking something when it is there. All right. And I actually want to show you, I'm going to look at some bid-ask spreads in one here in just a minute. Let's look at another one though. We saw WDC, Western Digital. And check this out. Again, across the board, we're seeing so many of these. So many. High, higher high, really strong run up. High, lower high on the indicator. A pullback. Um, this one, I don't know. Will this bounce right here at this moving average? Possibly. We could see a possible bounce. Again, is this something on Monday, Tuesday? Could be setting up for potential trade. We'll see. We'll see. So keep an eye out. We'll see what happens with that. Another thing that's kind of interesting is to watch the RSI and see, and it can be the MACD. I mean, I could use any type of an indicator, but looking to see where that is. One of the things about the RSI, we already talked about using it as divergence, but is also looking at the 50%. And the 50% can often act as a level of support and resistance in and of itself. And so you can see right here, in fact, there was a good example of it where it came back, bounced right there at that 50%. Right now, bounced again there, and right now it's underneath it. The day hasn't closed. Will we see this come back up and close above it, or will this break it? And that could say, there's still a lot of bearish momentum that could push it lower. So that's something to keep an eye on to see kind of where that closes up, right? AMD. This is one, again, kind of talking about those divergences, right? We can see this, but I'm going to take this a little bit further. We can see the price action rising. You can see the dip in the peaks, but this one coming down is a little bit different from the others because if we look at that 50%, in fact, let me get the horizontal on here. If we look at that 50%, look at this. Look at this. 50% right there. Look at how, it's kind of resistance all back in here. There's some resistance back in here, some resistance all through here. But once it broke above that, it did a pretty good number. It came back, bounced off of it right here. It's right back at it. You see that? Right back at it. So we could possibly see some sort of a bounce. This one hasn't even dropped as hard. There's not as much bearish pressure. So it's potentially we could see AMD maybe take a little bit of a turnaround, ahead of some of these other technology stocks like the WDCs and the MUs that we were looking at. And so that's just another thing to keep in mind as you're looking through the stocks. And by the way, so, some would say, okay, why don't we take this? We'll look for potential trade. And let's look at this. What are we at? About 500 roughly. Let's go over to the trade tab. And I want to bring it back to what I was saying a little bit earlier about those bid-ask spreads. And so we come out here. Let's look for, I did this. I got to do this though. We got to make this just a little bit bigger. For a presentation side, for me, I like it the size I have it, but I know for on your side, it's a little bit better if I use a little bit larger font. I'll go to large, but it kind of clutters things up on my end, but we'll do it. Hopefully that helps you out a little bit. I know my eyes are getting old, and so it becomes a little more difficult to see some of those smaller fonts. But okay, let's go out. We have, what do we have here? We have August, 36 days to expiration, right? And so we're looking for about 30 to 40 days roughly. We have 29 for 31st of July, so that one's a possibility. 36 is kind of right there in the middle of that 30 to 40. So we'll look at the August. And if we're coming over here and saying, okay, let's find something with a delta between 30 and 40, we'll maybe come out here and say, okay, maybe a 35 or something like that, right in the middle. And if we go out here and then we'll click on the bid saying, okay, let's sell this 485. So we'll create a bullish put spread or a short put spread. So I'll click on that, and then I'm going to hold down the control button. I'm going to come down and click on the 480. So basically we're selling that, bringing in this 35.60, but we're going to use some of that to buy some protection down below, right? And so we have a 5 wide spread here. We're getting a 240 for it. So, it's not too bad actually for that credit. But here's the thing. Look at this bit, the mid here. Look at the mid versus the natural. That's crazy. Negative 70 cents on the natural. So while it looks enticing at first, you think, okay, actually 240 isn't too bad. We're getting it's only about a 50-50 on, we're getting almost half of the potential risk on that, right? Like, meaning it was $5 and we're getting 240 on that. So that would leave our risk on the trade at $2.60. That's the 5 wide spread minus the 240, leaves us with 260 of risk. But what's the likelihood of getting filled there? In paper money, pretty high. In a live account, not so good. I mean, we can always send it off and see if it happens, but it's just more difficult to get out of. And this is what I was talking about, that we have a day like today where we have a quick spike in that volatility. We can see those bid-ask spreads widen to the point where it's just difficult to make it happen. And look at how it's bouncing around quite a bit. It's all over the place. And so, even if I send that off, well, again, it'd probably get filled here, but in real money, very unlikely. And so I don't want to do that. And you can see in here, what do we have here? We're looking at this about almost what is that? About a little over $3, almost a $4 wide spread. Now about $3.50 spread in there, $3.50. 350 bucks, right? That's on one side. Then we got to turn around and do it again on the other side. That's just a lot. There's just a lot in there. So again, it just makes it a little bit more challenging to make a play on a day like today. And so some days, take an early holiday, right? Not all stocks are dropping. We have Apple making a quick pop here, running on up, breaking above an old resistance level. Now, this one's going to be interesting to see what happens here. From a technical standpoint, here's the pros and cons on it. Pros, it broke through an old resistance area right here. Another pro, big candle, and usually halfway of a large candle can potentially act as an area of support and resistance. So we can see this large candle. Whoa, well, look at that right there. About halfway is where that old resistance is. That are just kind of lining up, coming together. So great, opportunity to teach from a technical standpoint. But, it's just the question is, will that hold or not? Will it end up there for the day? And we don't know that. But we can look and just see, what's even out here. Like if we're looking to be around this 300, use that as a support level, as a buffer. Let's just see. So let's go over to Apple. We'll look at the same time frame. We're going to go out to that August, 36 days out, right? And if we're looking at that delta as a kind of a proxy for probabilities, looking for this is the probability being in the money, and that's roughly 36% for using that. That's around that 300. So this is lining up kind of nice. And look at these are kind of tighter, right? So we're getting something setting up a little bit better here. And so let's go ahead and click on this and see what we can do. If we were to sell at 300 and bring in that $7, so I'm going to sell that. But then we're going to use some of those proceeds to actually buy some protection, because right now, we're on the hook anywhere under $300. If the stock were to go down to $200, we'd be in for $100 of risk minus our $7 gain. And so that's a lot. So we're going to take some of that $7 and we're going to actually buy some protection down below. So I'm going to hold down the control button, click on the ask, and that's going to create this 300 295. So we have a 5 wide spread there. 5 wide spread. And so what is the risk on this trade? Well, we're going to bring in a credit, and you can see this is much more likely to get filled versus what we saw before, We're still pushing it that mid with 40 cents, but obviously a lot closer than what we saw on AMD. But let's look at this. So we have a 5 wide spread, so $5. I'm just going to do 500. minus 165, because that's what it is per contract, is 335. And so we have roughly a 50% return on risk. And how am I getting that? Well, I'm saying our return is what we can make on this is a $1.65, and the risk on that was divide that by the 335 that we're risking on that trade. You can see it's real close to 50%, right? So the numbers are looking a lot better on this, and something that we can go ahead and make a play on. So let's go ahead and do this. In fact, what was that again? Our risk was what? 335. And so if we're using $1,000 of risk, like if we're taking $1,000 of our portfolio and risking that per trade, then we're going to divide that by the risk on this trade, and the risk per contract is, so divide that by the 335 that we came up with earlier, and that's going to say we can buy 2. Oh, so close to 3 contracts, right? But it's 2.9. That was probably 160. We could do it. In fact, maybe we'll do it with 2 contracts. Stay within our rules, right? But that's a close one. That's a tight one. If we got just a little bit less, we got filled a little bit less, we could probably swing that thing. But let's go ahead and hit confirm and send on this and just check this out. So max profit on this, $330. That's 165 times the 2 contracts. The max loss on this is 670. That's the 335 times the 2 contracts. And we're good to go. No other concerns red flags are popping up. So go ahead and send this off. And then we're gonna go ahead and put a box out there. We're gonna assume that's gonna get filled. Hopefully that will. What was that? August? What's the expiration on that? August 7th. So we'll go out to the chart. We're going to draw a box on here saying, okay, we need it above 300. So we're getting in on this day. We need above 300 by August 7th. Can we get out to August 7th? Oh, we cannot. We cannot. So what we're going to do is drag this over. Do we have, okay, that's going to be enough. We're going to activate this and pull it over a little bit more. August 7th, right there. So there's our August 7th. And so this is it. It doesn't matter how high we take it. It's just the idea is we need price action to be above this level by expiration right here. All right. All right, cool. So that's one thing we got in. Now let me just check, make sure there's a couple comments that are coming in. I just want to make sure that we address those. And so, Bogus is saying, hey, there wasn't much open interest on that AMD, and you're right. And they bring up the weekly AMD, and something that I've pointed out several times in this class is that oftentimes when you're looking at the weeklies, they may not have as much open interest as the monthlies, the typical third Friday. And so if you're struggling now, obviously when you're looking at a window, sometimes you have to go with that, right? But sometimes you get that opportunity where you can say, okay, maybe I go with the, one on a little bit of the short end or one a little bit on the end, one long end, like one might be 29 days or something like that. And then we got 36 days on the next one. And oftentimes if you kind of compare the open interest on the monthlies, get something like 300 has 23,000, a lot of open interest there. But if we go here and look at the 300, let's see what we have here. Well, that's kind of weird saying no open interest. So not as much. Maybe it seems like there should be something there, but if not, that's a great example of there's less open interest oftentimes on those weeklies. And so you can always check out the monthlies, see if that helps tighten those bid-ask spreads. Let's see. Donna, I'm just trying to see where Donna asked a question there because obviously I missed something in there. Where is it? I see that Connie was trying to reply back. Okay. I don't see it. All right. Anyhow, make sure if you have questions, get them in there. Love to answer your questions. Okay. We only have a few more minutes. Let me just see if there's anything I'm missing. Let's look at this. Let's look at this. Let's look at CRM, Salesforce. So maybe something a little bit more, on the bearish side, right? We've been talking bullish, but not everything is bullish. Some things have been bearish. And so if we look at CRM or Salesforce, we made some plays on this before. Let's go ahead and remove all these old drawings. Let's see. Now let's see this. Let's remove. I want to get rid of everything. So I want to remove a couple of these old ones. So let's get rid of that and focus over here. Now, what we have in here is we do have a resistance level. Look at the support right here. Check this out. So we have a support level right there, support level right here, came down, broke through it, rallying back up and looking, oh, it's starting to climb a little bit higher. When I was looking at this earlier, I was preparing for this class, it was sitting right there at it, looking to bounce off that. And this was just down. I was going to say, hey, let's keep an eye on the RSI. Check this out. I'm going to hold this across here. Look at this resistance, resistance, resistance. Come up here, chopping around. Look at it does happen to find that resistance or that 50% as potentially a support or resistance area, giving us some ideas there. This one looking to possibly bounce off this. Now, I'm not going to go make a play on this now. Earlier, again, I like to wait till the end of the day. A lot of traders may do that potentially because, it's solidified, right? Did it break or did it not? And intraday, we don't know. Waiting for the end of the day gives us a clearer picture. But sometimes we have to take trades in the class because this is when the class is. Question is cup and handle setup? No, not really. I don't necessarily see the cup and handle yet. One thing we could also throw on here though is kind of looking at that Fibonacci, right? Because it did make a drop from this area, dropping it down to that support level that it found and bounced off of. According to this, there's potentially a little bit more run. So there's different levels of support and resistance. This is one level of resistance. This would be another potential area that lines up with some of these other, kind of dips in here. And so somewhere in this ballpark, we might see some resistance. And that would create the bear flag. Trader Joe, yeah, that would create the bear flag. All right. So potentially watching for this one to, actually, let me get rid of this, remove the drawing. Drop down here and do that flag portion, right? Come on, flag, work with me here. Come on. This close to Independence Day, we should be able to draw a flag with no problem, right? It's only fitting. There we go. We got to do a bull flag for the U.S., right? And so that's what we're looking for is a potential rollover, maybe a break to that. So again, something else to keep an eye on. Let me just see, Donna, let's see, I'd like to understand all this. I want to be able to make money doing this. That's my son, and he said he only knew how to buy and sell stock. I was told watching these will help me learn. And Donna, I would say this, keep at it. Keep at it. And I just want to say something real quick about when I first learned 20 plus, 20, 30 years ago, it's been a bit. I would take a chart like this. I'd grab this and I'd say, hey, what do you see in this? A friend of mine who traded a lot, he knew a lot of things. He'd say, well, you got this, hanging man candlestick going on here, and you have this, double bottom, formation here, and you see this, and I go, yeah, I see it, and I'd walk away going, I have no clue what he was talking about. I just didn't want to feel stupid, so I said, yeah, but I kept doing it, right? I kept going back and saying, hey, show me what you see here. And I remember one day, all of a sudden, I was like, bang, I saw it. And then I started seeing it here and there and everywhere. All of a sudden, it's coming together. So stick with it. Watching me cover some of these examples, watching other coaches cover them, give it time. Give it time. Give it some time for your mind to kind of develop that eye for it. All right, it does come. All right. What would you see? I'm just gonna. There's a question just asking about, hey, what would you like to see in options contracts, open interest and volume in order to consider placing a trade? And so one thing you could look at is some will say, hey, just make sure that the bid-ask spread isn't more than 10% of the cost of the option. So that's one way you could look at it. Obviously, when it comes to open interest, the higher, the better. And, if you kind of use that 10% rule, that will help you get a gauge for it. And this is why if you're putting together a search, maybe it's been a minute since I've done a search, maybe next time I do a class, I'll do it on a search again. But it's where you look for really stocks that have a lot of volume will help. If you have stocks that have 2 million, 3 million shares traded on a daily average, then those stocks will tend to have tighter bid-ask spreads, and those are trading, 500,000 to a million on average on a daily basis. And so that's something that you can look for to help narrow down that pool of potential stocks to look at. And that's just looking on the stock side. But once you find those, which isn't too difficult, then it will really kind of help you be on the right path for looking at options with narrower bid-ask spreads. All right. So yeah, the 10% rule is just like looking like if you're looking at one that's $1, you're going to pay $1 for it. I'm just making up one right here, like $1. Look for it to be about 10 cents wide. If it's $20, $2 wide, kind of that idea. Just kind of keep it around that ballpark. Everything needs to be taken with a grain of salt. It's just a guideline because it doesn't always play out. Today we're having some where, it's a lot more, we got some wider best spreads than usual. Also looking at the volatility of the stocks, sometimes more volatile stocks will just move more and so we'll have wider ones, but just use it as a gauge, as a guideline. Okay. Thank you. Connie posted one that you could look video you could watch. She'll go into more depth on this or just getting started with stock investing. So thank you for doing that for Donna and others. So hey, we're out of time though. I gotta wrap this up, but I just want to hopefully you picked up some good things today. We covered some stocks. We looked at the market. We covered some stocks that that weren't there, right? And it's sometimes one of the most difficult things to do is just sit on our hands. But sometimes that's what the market's offering, and we got to be accustomed to doing that, taking what the market offers. And if it's not offering anything, we walk away. Even though we want to do something, we got to walk away. So we looked at that. We actually we're able to find one on Apple, place a trade there, and covered your questions. So, hey, it's good to be back. It's good to be with you. But with that said, we're going back into a holiday. So I just got back from some vacation, going right back into another one. Oh, and so by the way, forgot my hat. Um, just celebrating our U.S. independence. Have a good, safe Independence Day. I hope wherever you are, you enjoy it. Maybe enjoy some soccer, whatever else is going on in your life. But either way, whatever you do, enjoy it. Thank you for joining me today, and I'll catch you next week. See ya.